Yo, what's good, everybody? I do trade inversions most of the time. You guys know that. I do like taking turtle soups, and then I also do like the 2022 ICT model, which was just like a liquidity sweep, break a structure, pull back to a fair value gap. Now that works. I literally took that today and caught this whole entire upside move. But inversion fair value gaps are like the main confluence that I love. I love inversions. They're right off of the liquidity sweep. The risk to reward is the best, and I think it's just the best trade that you can possibly take, the best setup that you can take. So let's go over a couple inversion setups. I actually want to go over today's setup. It was a perfect draw on liquidity to from this low to these gaps up here, and I want to show you guys how I took it. So this 4 hour, I already did do a trade recap on this, but I'm going to show you again. So we were right, where were we at? Right here on like the 4 hour. This was yesterday night. We opened, boom, we swept all of this liquidity down here. Took out this low, this low, this low. We swept all of those lows and swept liquidity, and that was at 9 a.m. So that was literally when market was about to open right here. We're going the 5 minute time frame. So this is what happened right here. Market open, boom, 5 minute looked like this. We made a big move up, and we do have a lot of fair value gaps. Now, a lot of you guys might sit there and be like, oh, well, there's a lot of fair value gaps, Johnny. How am I supposed to know that we're going to continue up if we have so many gaps? Because a lot of my students say that, and I totally get it. Now, that's where the inversion comes into play. Me personally, I saw inverse all of these right here. So I saw us inverse all of them. We did respect this one up here. Now, obviously, that's going to definitely deliver us down lower. But I don't think this 5 minute, if the bias is higher, is going to deliver us back below these lows. Because remember, the 4 hour already took out these lows right here, and we are in a bullish sentiment. If you guys can see, like, the daily time frame is in an uptrend. You know what I mean? We're trending up. The weekly time frame, like, look at this, guys. We're in an uptrend. You guys can see that we are very bullish on NASDAQ. So, you guys see the weekly and the daily was looking like that. And the 4 hour already swept liquidity. You guys remember, right when market was about to open, the 4 hour came down and swept last week's lows, I think. Yeah, literally Friday's lows inside of a 4 hour gap, also in a bullish gap. So when we're sweeping daily lows like that, you could definitely see the daily time frame be bullish and that whole entire day be bullish if we're taking out this big level inside of a bullish PD array and a bullish low. Well, or I'm sorry, just a low that would make us bullish. So when you saw that, bro, what are you doing? My dog is knocking stuff over. When you see that big upside move, what I was looking at is, okay, I don't really see any bullish fair value gaps. So, like, what am I going to take a pullback off of? You know what I mean? It's going to be kind of hard to take a pullback when you know there's no gaps. So, you're looking at the 3 minute right here. I was looking today, and I'm like, yo, there's no gaps. Like, where the fuck am I going to fill at? I'm probably not going to take this trade. But then, what did I see on ES? I'm pretty sure, yep, I took ES today. This is exactly what I saw on the 5 minute time frame. Right here on ES, which is basically the same exact thing as NASDAQ. We took out this low. On the same thing on ES. You guys know what I'm talking about. Remember the low on NASDAQ we were looking at? It took out that same low on ES. Same low. Yo, stop. My dog is chewing up everything. Literally. ES took out the same exact low. So what did I look at? The 5 minute time frame. And I'm like, okay, we inversed all of these fair value gaps. We're delivering off the top one still. But let me see this pull back. What do we have? Do we have a 5 minute gap? Yes, we actually do on here. It's very small. What do you see? A 5 minute gap right here. Also, who can name something that you see that is a magnet of price? Equal lows. Do you guys see these equal lows right here? Let me take off these indicators real quick. Look at these equal lows right here. Very much equal to each other. Literally perfectly equal. Perfectly equal right here. You guys can see if we have equal lows right there, 2 minute equal lows. If we have equal lows and we have a fair value gap, also there was a 15 minute fair value gap right there under them equal lows. 15 minute fair value gap. So what I was thinking right here, I was like, okay, we did inverse all of these and we did make this big upside move. We broke structure back to the upside when we delivered out of this low right here. So then I was like, okay, I want to see the pullback to this 15 minute time frame because right under the 15 minute is what? The 5 minute fair value gap. So if you have a 5 minute fair value gap inside of a 15, and then also You have a 3-minute gap inside of the 15, a 2-minute gap with equal lows. You have all of these different time frames adding up with the same gap, that means there's a big imbalance right there. Like that's an inefficiency right there. So that means that buyers and sellers were obviously undecided, and there is an imbalance. That means there's a fair value gap. So when price comes back to this gap and takes out equal lows as well, you can definitely look for a bounce like that. And the main reason for the bounce, why are we thinking it's going to go higher? Because ES swept these 4-hour daily and weekly lows. Also, we were in a daily fair value gap. Look at that. Daily fair value gap. You see, this is a whole entire big move from the election, pulled back, because you remember, every stock is not just going to look like this forever. It's going to have pullbacks to discounts and premiums if it wants to go into the other direction. As simple as that. And if you can see right here, from this low all the way to this high, if we map out our equilibrium, our 50% got hit to a fucking T. Look at that on the daily. Never broke below equilibrium. Hit the fair value gap. Oh, swept that. Beautiful play right there. So then we're looking at this upside move. Remember, the reason we think we're going to target this and these highs up here is because of that 4-hour daily, weekly sweep, that crazy sweep. That was literally insane. So I saw the equal lows. Let's see what happens. Pulls back. Boom. Right below the equal lows. I literally entered like right here. And then my stop loss was below the lows. So it actually did come down a little bit, but then it ended up closing above. Like, look, came all the way down, ended up closing above the fair value gap, which means we respected the 5-minute. Boom. Beautiful 15-minute fair value gap entry, targeting these and these. Look at this. Look at this trade. Wham. Straight to the upside, drawn liquidity was met. What do we see? We see this accumulation on like the higher time frames, like the 4-hour right here. Accumulation. Let's look at the 15-minute. Accumulation, pulls back, manipulation. We take out these lows, distribute to the upside for the draw and liquidity. It is that simple. Really realize that, and just get the draw and liquidity down. Make sure you understand liquidity sweeps and higher time frame levels. You can see that this was last week's low right here. Today is what? Tuesday. Today we cashed out on Tuesday. This was Monday, yesterday. Still consolidating in this range, in these fair value gaps. And then Friday. Friday made this big low. Big downside move Friday. Boom. 4 p.m. was right here. So we closed right here. Made this low. So here was our low. That's a huge level. Friday's low never got taken out. We're just consolidating for Saturday, Sunday, Monday, Tuesday comes. Today. Swept that. Boom. There's your whole entire upside move. And why do we look at this, guys? Because of the daily. Because of the weekly. Look at the higher time frames. Guys, once you can get down the higher time frames, you'll start to realize that once you can like realize these higher time frames and understand where price wants to target and where it wants to go, oh my goodness, you are set. Like, look right here. Look at these relative equal lows right here. Or relative lows. Relative equal lows. They're basically freaking like a magnet. Look at this. Look, this low never got taken out. So these lows right here. That's probably a magnet in price on the weekly. So like, shit, I don't know how higher we're going to want to go, but I can definitely see us going to the downside and targeting these lows right here. And out of those lows, what's under it? A fair value gap, broski. Probably going to be a monthly. So a fair value gap right here, so we could pull back, take out those relative equal lows, hit the rest of this weekly, and then rip to the upside. Especially since there's going to be a war coming, and I don't think like it's a huge downside move. Like if you look at SPY, like down here is probably, it's like a $20 move to be honest. Like, but it could still happen, but who knows? It really depends. But yeah, that was a great setup. You guys saw the equal lows. Now let's go on another setup today. I literally want to go on a random stock and show you an inversion setup that I probably would see. Let's actually look at IWM. This is something that I like trading a lot. Look at this today. IWM taking out Friday's lows as well. Today, we took them out pre-market. Let's see an inversion setup. Took them out pre-market. Boom. We inverse actually all of these fair value gaps. So like this one, we ended up inversing. All of these bearish ones over here, we inversed. So we look at that. And then let's go to the 1 minute. Because I usually like my inverses on like the lower time frames. The 1, 2, 3, 5. Like these lower time frames. Most likely the 1. See price kind of just open and accumulate. Price comes down. hits this order block right here on the 1 minute, doesn't sweep anything. Remember, we already swept that level pre-market. Once you see that pre-market, if I can go to it, wherever the fuck it is, right here, once you see the level already get swept pre-market, you can obviously just think, yo, we're probably going to go right to the upside as soon as market opens. So, what happens? Price sweeps it, moves to the upside. Price opens right here. Let me show you. Price opens, pulls back, hits this 1 minute order block right here. You can see. 5 minute order block, I'm sure, as well. Why does it put me to random spots? Yeah. 5 minute order block. 5 minute, is that a FVG? Might be like a very small one. Nah, I wouldn't count that. Just look at the 5 minute order block. We're respecting this. The EMAs are probably getting respected. Look at that. They're crossing. So what could you look for? An inversion fair value gap. Let's see if this would have worked. This is choppy price action. I'm not even going to lie to you. But let's say we pull back to that and then we inverse this right here. This fair value gap. We inverse that finally. We pull back. This is very choppy price action. But let's say it pulls back to, like, we inverse right here, pull back to this 2 minute fair value gap right here. You could have taken it in there somewhere, you know what I mean? Stop loss at the low around here. Choppy price action, but you saw it would have worked. Now, that would have been the only inversion setup for this day. And remember, I just picked a random stock, literally. Now, let's give another example. Chop. Break. Now, this is like the 2022 model. You see the liquidity sweep down here. Remember, we were sweeping those pre-market levels down here. Swept that bitch out. Consolidating. Boom. We finally break above this kind of resistance. You know what I mean? You see this big resistance line right here. If you just scale out, like, look at this big resistance right here. You know what I mean? We're creating a lot of resistance. We never broke this. Oh, finally, price opens. We actually break it. Let me clear this off. It looks like big-ass drawing. We actually break it. Let's see us pull back. 5 minute fair value gap right here. Boom, your entry is right here. This is literally super high up. Not the best risk to reward, but it's up there. And look, we're trending up for the rest of the day. It's just a trending day. Let's see if there was a 15 minute fair value gap. No 15 minute. Let's see if there was a 3 minute after the break. So, like, right here, beautiful. After we finally break structure, because look, we're consolidating right here. So what are you going to look at? You're going to look at the high, and you're going to wait for a break above that to obviously wait for a retest. Boom. We finally break above it with a closure just like that on the 3 minute. What do? We create a FVG. See that, right? And then if we scale down to like the 1 minute, let's see. Scale down to the 1 minute, we ended up breaking out of this resistance right here. Pull back to a 1 minute fair value gap. Boom. Pulls back to it. Let's see if we enter right here. Stop loss like below this low. Then you just target all of these highs up here. Bang. Just like that. Beautiful. Just like that. And that's how you take like a break of structure and then a pullback. That's usually how we do it. Now, if you're taking an inversion setup, it's going to be a bit different. It's not going to be just like a liquidity sweep, break of structure, pullback. It's going to be more like a liquidity sweep and inversion entry, and then you're targeting the recent highs and the drawn liquidity, whether it's higher or lower at buy side or sell side. Or what you can do for a better risk to reward is what I do. I look at a liquidity sweep on the higher time frame on these higher level PD arrays or higher time frame highs and lows. I look at the liquidity sweep or a bigger time frame level to get hit. Boom. Once that level gets hit, then I look for the opposite fair value gap to get disrespected. So let's say if we have a downside move coming to this point of interest, the liquidity right here, let's say we swept lows, I want to see a bearish fair value gap get disrespected. So instead of it pulling back like this and respecting it and going lower, what it's doing is it's actually disrespecting it, it's violating it, and it's closing above it. That means that disrespected it. That means that there's no more sellers in that area. We actually closed above it. That means buyers are stronger, so we're probably going to want to go up to the next imbalance, the next high, low, wherever these PD arrays and points of interest of liquidity are lying. Wherever orders are flowing in the market, wherever they're placed, wherever liquidity is lying, that's where the market is going to want to target. So let's say if we disrespect this imbalance with all of these orders right here, that means that there's no more sell orders in that area. There's no, the buyers and sellers are obviously not imbalanced anymore, you know what I mean? Like the buyers are stronger, simple. We go right up to the next drawn liquidity. This is the drawn liquidity, this high right here. Then we can probably go lower. We need to take out liquidity before we are going to go lower. So that's why we take these inversion setups. We're usually taking them right here. And then what happens is you see them go straight up to the draw and liquidity. Or wait for like a miniature pullback to the imbalance, like right here. And then it'll continue up. And then that's basically the same thing with like a liquidity sweep, high, low, higher, high, pullback. You know what I mean? So we're basically taking it at a lower spot in the market, if that makes sense. That's the reason why we do take inversions. This was just a little back testing session. I hope that you enjoyed this. I hope that this helped you out a little bit. Maybe it made you understand inversions more, how I'm taking setups. That was my trade for today. Hope you guys enjoyed that shit. Peace out. Love y'all.